Welcome to the NWR Virtual Resources Series. My name is Kerry Stevenson, and I'm now bringing you Blackstone Minerals. The ASX code is BSX. Blackstone is focused on building an integrated, both upstream and downstream battery metals processing business over in Vietnam. They produce nickel, cobalt, and manganese, which are all precursors for Asia's growing lithium-ion battery supply. Really interested. They're interested in this presentation. Scott, great to see you. Looking forward and mining green. Over to you, sir.
Thanks, Kerry. Thanks for the intro, and thanks to Nathan Ryan, Steffi, and all the team at NWR. They've been a great supporter of Blackstone since we started nearly 4 years ago now. So thanks to NWR for the opportunity to present today. As Kerry said, we have an existing operation that is under care and maintenance in northern Vietnam. We're looking to turn that mine back on, but we're looking at building a downstream nickel refinery and combining it with cobalt and manganese to produce the precursor product for the lithium-ion battery industry. So as people probably are aware, there's a movement towards a high nickel cathode on the ratio of nickel, cobalt to manganese of 8:1:1. So the initial lithium-ion battery was a 1:1:1 ratio and had just as much cobalt and manganese. But very quickly, they've moved towards this high nickel cathode chemistry, which is the 8:1:1, and that's the product we're looking to produce from our downstream business. We also have a district scale nickel sulfide opportunity. So the previous owners, they mined one ore body, they left behind 25, which is great for us. We've turned on the drill rigs. We've got 8 drill rigs operating at the moment, up to 13 or 14 at times. So we're aggressively drilling out what we think could be a world-class nickel sulfide district. And then we're going to build this downstream business, and it's scalable and modular. So as long as we can find a nickel supply from our mine and our third-party feed providers, we will scale this up because of the significant demand that's coming. So it is modular as well. There's no reason why we would stop in Vietnam. We can do this in other parts of the world. And because of that significant demand that's coming, you can see as an industry, we need 1.5 million tons per annum of nickel. And that's larger than the current supply of class 1 nickel. So as an industry, we need to find another entire supply of the world supply again by 2030. So we've got a big challenge ahead. So you can see here, these are the largest class 1 nickel producers in the world, some big names there. A lot of these companies are focused on other metals, and they're not, I suppose, nickel specific. So you can see Vale, Glencore, BHP, these are large conglomerates. They focus on other metals. The interesting thing here is these are the major players, and they only produce around 100 to 200,000 tons per annum of nickel, and that's the largest players. And as an industry, we need 1.5 million tons per annum. So there's a big gap between the largest suppliers in the market and then the demand that's coming. So we're looking to be a major player in this market, and we want to be in the top 5, around that same size as Glencore and BHP. So you can see here, this is the movement in the chemistry over the next 3 to 5 years. It's really pushing into this NCM 8:1:1 product. As I said earlier, the initial battery was 1:1:1. They've moved to 5:2:3 and 6:2:2. And then very quickly, we'll be moving to the 8:1:1 ratio by 2030. That'll be the dominant chemistry mix. And that's the particular product that we'll be producing from our downstream business. Very well located in northern Vietnam, this mine and this downstream business we're looking to build on the doorstep of all the major players in the industry. You can see China is a dominant player, South Korea and Japan. So well positioned on the doorstep of these major players in the industry. And a lot of these players we're talking to as potential funding partners and also offtake partners for the downstream business. You can see here, this is where we're located in northern Vietnam. So we're 6 hours west of Hanoi. The mine is in the Son La province. We're looking at refinery either in Son La or the nearby province of Phu Tho. Very close to the rail infrastructure as well. See, this location here is where we're looking at a potential refinery, and that has rail infrastructure down to the port of city of Hai Phong. Hai Phong is a growth hub for electronics, but particularly for the lithium-ion battery and electric vehicles. So you can see VinFast is a local electric vehicle company looking to build electric vehicles, electric scooters. They've also come out and said they're looking to build lithium-ion batteries as well. So very well positioned with VinFast down the road. LG and Samsung have put $20 billion into this region already for their electronics manufacturing. So it's a great hub for foreign direct investment. You can see some very good tax incentives as well. So very low tax rates in those early years to really incentivize foreign direct investment, and we'll be able to benefit from that. So there's a real push from the Vietnamese government to bring in foreign direct investment, particularly from those big hubs out of South Korea and Japan. You can see here, this is what it's all about. We want to be moving towards a green nickel product as an industry. We believe that we have the opportunity to start from net zero and not aim for net zero like our peers. Some of our peers are aiming for net zero by 2050. We're aiming to start at net zero. We can do that because we have those two large hydroelectric power plants, one in Son La, one in Hoa Binh. So we have abundant supply of hydroelectric power. We're looking at a vertically integrated model which reduces the transport costs and the carbon associated with transport. Sulfide nickel is the particular type you want to be looking at for green nickel. The pressure oxidation process is a hydromet technology tailored for green nickel, but also for the lithium-ion battery products. So those chemical products are better suited with this hydromet technology. And we're looking at electric mining equipment. So we're in the electric mine consortium with some of the major players in the mining industry, and we're very focused on electrification of our mining fleet, and always focused on a highest level of ESG compliance at the corporate governance level. It's just a quick snapshot of the corporate structure. Well positioned with cash at around $13 million at the end of the quarter. Deutsche Balaton, very supportive shareholder out of Germany. EcoPro, the largest cathode manufacturer in the world, they're at 12%. We've also brought in Fidelity, a big name in the institutional investor space. And really, they were really, I suppose, focused on our highest level of ESG compliance. Board and management with a strong position as well. We're finally getting some sell-side analyst coverage. You can see there's some big names in the broking industry covering the stock now. We've got price targets ranging from $1 to $1.90. So a lot of value in the stock. And then you can see the board there. We've got Mr. Jung as a representative of EcoPro. We've recently added Alison Gaines. She's a corporate governance expert. And then we've got the executive team there would have been there from the start. So that's Hamish, Andrew, and I, with a more technical background. Myself is mining engineering, Hamish and Andrew as geologists. So just on the structure of this business, we have two parts. As Kerry said, we have an upstream business and a downstream business. The upstream is the mine level. So that's the previously operating Banfoot nickel mine. We own 90%. We have a local partner, a Son La conglomerate called Cosima. They're a local partner. At the upstream level, we also have a very strong relationship with Trafigura. They're the largest nickel trader in the world. They're going to be our feedstock partner into our downstream business. There's a number of other feedstock partners we're talking to, or potential partners, and there's a lot of opportunities out there to work with existing miners or existing concentrates and feed them into our downstream business. The downstream is where it gets very interesting. This is an alliance model where we're looking at joint ventures with downstream partners. They can be cathode, they can be lithium-ion battery, or even electric vehicle companies. So we believe that there's room for multiple partners at that downstream level because there's so much demand coming for that NCM precursor product. You can see here that NCM product is the refining business that we're looking to move into. To produce a cathode, you add lithium, and then the cathode is the main part of that lithium-ion battery. So we are starting the first stage, 2 stages of the lithium-ion battery. And one is the concentrate at the mine level, and then the refining business, which is where we convert the nickel concentrate into a precursor NCM 811. We also have MHP, which is an intermediate product, which is in high demand in the lithium-ion battery industry as well. So we can do that with our multiple partners on both sides. We have potential for multiple feedstock partners. We have potential for multiple downstream partners, and it is scalable. So as long as that we can find the supply to feed into this from our third-party feed providers and our existing mine, then we will scale this up depending on the supply that we can get our hands on. So just on the upstream business, before we'll finish with the downstream business. At the upstream, a lot of drilling going on. We're drilling out our first 5 ore bodies. There's 2 types of ore bodies: massive sulfide veins, which are the MSVs, and large disseminated sulfide open pit mines. So we're drilling out our first 5. We're putting them into our pre-feasibility study, which is due later in the year. Then we'll move into the bankable study phase, restart the existing concentrator. We will look to build a second concentrator. So there will be 2 concentrators on site, one for the high-grade massive sulfides, one for the disseminated large tonnage open pit mines. And then we'll move all of our concentrate into our downstream business, which is due in 2024. So just on that nickel sulfide district, we have 25 targets outcropping at surface, untested, undrilled. We've gone to the first 5, we've drilled them out, and we have 5 mines. We have 2 open pit mines and 3 underground mines, 20 more targets to come. It is 100% success rate by using the EM technology, which is the modern geophysical technology. We have 2 geophysics crews that are walking through this belt and unlocking what we think could be a world-class district. This was the first ore body we drilled out, and we put this into our scoping study around 12 months ago now. This is a large bulk tonnage open pit mine, very similar to the Mount Keith nickel mine in Western Australia, which has been a very successful mine for BHP and previously Western Mining. So we have similar scale and grade and tonnage to these large scale open pit mines. It's around 280,000 tons of nickel. It's a bowl-shaped intrusion, which it lends to great bulk tonnage, low strip ratio, open pit mining. So it's a great starting point. We believe that there's an 8 to 10 years here just in this first ore body. This is our second open pit opportunity. It's called Ta Khoa. Very similar bowl-shaped intrusion, not quite as big as Ban Phuc, but we're looking at a maiden resource on this one in the coming weeks. This is one of our massive sulfide veins. It's called Ban Chang. We have an east and a west zone. The interesting thing about these massive sulfides, they also have a halo of disseminated, and the disseminated zone can be up to 15 meters wide. So we're looking at a fairly large bulk tonnage underground mining opportunity here as well. So it's narrow vein, high grade, massive sulfide with a disseminated halo. And that allows us to really bulk out the underground scenario, particularly with the byproduct credits. So we have strong credits in our copper, cobalt, platinum, palladium, and gold. Our next one is the King Snake. King Snake is another one of our high-grade massive sulfide veins. This one's particularly high-grade in platinum, palladium, gold, rhodium, and all the precious metals and platinum group elements that come with it. So another one of these high-grade massive sulfide underground mines. We have 3 of these coming in the coming weeks with resources, and then pushing them into the pre-feasibility study later in the year. So you can see there are many targets to come where we've drilled out the first 5. As I said, 5 mines from the first 5 targets, 100% hit rate, particularly because we're using the modern geophysics, electromagnetics. And then now we'll just test the other 20 behind it. And we believe there's many more to come. So there's a lot of opportunity to add resources over the coming months and years. We recently announced this collaboration. This is a new target. It's 10 kilometers away from Ban Phuc. It's outside of our tenure, but we're collaborating with the government to bring this into our exploration license area. And we have a strong collaboration with the Vietnamese government on this particular target. This target, this mag feature you can see here at Chim Ban is 15 times the size of Ban Phuc. So Ban Phuc is our largest ore body, and I said that's around 8 to 10 years of mine life there. And this Chim Ban target, which is 10 kilometers away, looks to be, the mag feature is 15 times the size. So we'll see how we go. It is only a mag feature and some good soils and some outcropping mineralization. So we'll know pretty soon whether we're onto a very large ore body there at Chim Ban. So just in summary, we have those large disseminated open pit, bulk tonnage open pit mines, which are those bowl-shaped intrusions. We have the massive sulfide veins, which are the narrow vein underground mines. We have 3 of those coming and plenty more where that came from. We've also got the Trafigura top-up feed. So the largest nickel trader in the world is our partner. They're really keen to unlock a significant amount of nickel in their trading book and feed it into our downstream refinery. There's a number of other third-party feed providers we're talking to as well. So anyone that has a nickel concentrator or is a developer in the nickel space, we will talk to them and we'll look to bring them in as partners in the downstream business as well. So just on the downstream, this is the high-level pre-feasibility study numbers. We're looking at a base case of 43,000 tonnes per annum of nickel, a $2 billion NPV at conservative pricing, and we'll talk about the pricing later. Strong IRR of 67% on a capital pre-production capital requirement of $491 million. So a strong payback in only 1.5 years on what we see as very conservative pricing, and we'll talk more about the pricing in a minute. Before we talk about the economics, this is the flow sheet that we're using. It's a pressure oxidation process, tried and tested technology, which has been used in the industry since the 1960s. We then use a solvent extraction process, which has also been around similar since the 1960s. So this is tried and tested technology used all through the mining industry. And we're really excited to bring this in. We've just today announced our team for the definitive feasibility study. Wood, a major player in this space. They are one of the best engineers in the world for the hydromet technology. So we've brought Wood in. We've also got ALS as our pilot plant provider, and we're looking to really bring in world-class expertise to deliver this project. Some interesting things about this flow sheet is we have the MHP intermediate, which is a really in-demand product for the lithium-ion battery. The payability on MHP is plus 90% at the moment, and has even reached up towards 100%. So that's an in-demand product, and that's a good leading indicator for the demand that's coming for the lithium-ion battery. We have some great byproducts as well. We have kieserite, which is a fertilizer product as a byproduct. We also have copper cathode. In the leach residue, we'll be looking to extract all those precious metals, the platinum group elements. And the other exciting part is this oxygen plant. We're looking to potentially, instead of an oxygen plant, build an electrolyzer, which would produce oxygen, but also green hydrogen as a byproduct. So some really interesting work going on, particularly with these byproducts and the idea of a circular economy and being able to use every part of this ore body to the benefits of the shareholders. So this chart is really our downstream business summed up. We can purchase nickel concentrate from our mine and at an arm's length transaction. We'll also purchase nickel concentrate from our third-party feed providers like Trafigura and any other nickel miners out there. We can buy that for around 75%, up to in the order of 75 to 80% at the current market rate. And we can convert it into the NCM 811 precursor product, which trades at a 20 to 40% premium to LME, which is effectively 120 to 140% payability. So we are basically doubling the value of the nickel by combining it with the cobalt and the manganese sulfate to produce the NCM 811 product. A good friend of mine, Noel Ong, coined the phrase, we are the hamburger kings of the nickel industry. We buy the ingredients of nickel, cobalt, manganese, we put them together into a hamburger and we sell it at a premium, and that's effectively what we're doing. So just on that premium, this is the SMM data, Shanghai Metal Market. If you go to metal.com, you can see these prices. There's a spot price for the NCM 811 product. And we're using 20% premium because that's the lowest it's ever been recorded. If we were to use today's premium, it's in the order of 40% premium to the LME nickel price, and that would drive a significantly higher NPV in the order of $3.5 billion for the same capital number of 491. So you can see we've conservatively used a 20% premium. We believe that premium will range between 20 and 40 over time. And at the moment, it's looking more like 40 and not like 20. So a lot of demand for this particular product. You can see the other thing that's interesting is that premium really drives the economics, and it's not linked to the nickel price. So this business, you can see down here.
Sorry, Scott, 1 minute left.
No worries. The nickel price is not linked to this downstream business. It's about the payability on the concentrate and the premium for the NCM product. This allows us, because of that strong premium and our competitive labor costs and hydroelectric power, we can pay a little bit extra for our nickel concentrate, and we can still drive strong NPVs in the order of $3 billion at today's pricing. So just in summary, we have completed that pre-feasibility study phase. We're now moving into the DFS and pilot plant. We've got world-class consulting engineers. We're working with the major players in the industry like Trafigura and EcoPro and many others that we can't talk about today. We're moving into that final investment decision over the next 12 months. That's a really big part of our de-risking. We believe that we will move towards closing the gap on those large NPVs as we move into the construction phase and we produce our first NCM 811 precursor products in 2024. Thank you for your time.
Scott, really good presentation. And I loved how you explained it all, especially the flow and the process, because one of the questions I had was lots of different metals, how are you going to work through them all? But that was really interesting questions. Ladies and gentlemen, put them in the Q&A panel down at the bottom of your screen, and I will get Scott to answer all of them. Scott, first up, first question is, do you see much threat from the lower cost but lower density LFP battery taking over as the preferred battery chemistry of NCM 811?
Yeah, so I disagree that it's lower cost. I think it's very similar costs, and potentially NCM may even be a better cost product. So it all comes down to the range anxiety. So there will be a role for LFP for vehicles that are city vehicles. If you want a vehicle that can travel long distances, you need the NCM 811 precursor. So there will be demand for smaller vehicles, vehicles that are city-based or constrained. But there will always be demand for long-haul vehicles, particularly in the trucks and the larger space. So the long-range vehicles will require NCM 811, and that's a very competitive cost profile, particularly because of the ability to recycle as well.
During your I've got so many questions for you, so make sure you ask questions, ladies and gentlemen. You spoke during your presentation about working with the Vietnamese government on exploration at the Chim Van target. First of all, what was the appeal of that joint exploration exercise? And secondly, how is it working from a shareholder point of view? Are they funding the exploration? What's the outline of it? Yeah,
so that particular target was originally in the tenure of the previous owners. Remember, this mining area has been established over 20 years ago by previous owners. So Falconbridge was the first owner back in the early 2000s, and they originally had this target in their tenure, but over time the tenure was reduced. So it's always been a known target, and very quickly, once we came in there and saw that target, we wanted to explore it. So it has taken a little bit of time because we've had a lot of other targets already. So the government have actually sort of over time realized that if we want a long security of supply for a downstream business, we need to look at these larger targets. So they've been very supportive. They're actually spending their own capital, so their own drill rigs. We've provided the electromagnetics and geophysics equipment and team. So it is a real partnership model, but they are drilling it over the next couple of months on their own balance sheet. And then if there is a nickel target there, that's when we can apply, and then we'll take it from there. And really excited to the fact that they are collaborating with us, and it's a real partnership model. We're using our expertise in the geophysics. They're using their drill rigs. We've obviously got plenty of drill rigs as well, but they're using their drill rigs as well. So, which is great. It's a real collaboration.
Well, it also, from an investor point of view, what it's saying to me is that the Vietnamese government are very much liking what you're doing and want to help you get to being a strong part of not only the country, the community, the mining sector over there. So that to me is a big tick. Next question, what are the next priorities in the lead up to the upstream PFS and the downstream DFS?
Yeah, so first things, we need upgraded resources or maiden resources on all those 5 ore bodies. That'll be in before the pre-feasibility study. So we're looking at an upgrade on Ban Phuc, and then maiden resources on the other 4, which is King Snake, Ta Kung, Ban Qua, and Ban Chang. So there's plenty of resources coming, and they're all with the geos at the moment, and hopefully we can bring them to market very soon. So that hopefully we can show the market what we've been doing. We've done over 50,000 meters of drilling, and so that's all coming out very soon. And then the pre-feasibility study will use those resources and then convert them into the mine plan. So that's a big couple of months leading into the pre-feasibility study phase. For the downstream, it's really about the pilot plan and the definitive feasibility study. So there'll be updates around and what we're doing on the pilot plant, and really just as we de-risk the downstream, we'll announce something. As you know, we're very open about transparency and really keeping the market up to date on what we're up to. So anything that's worth talking about, we'll make sure we do, and there'll be plenty to talk about before the end of the year.
Look, we are out of time, but I'm going to throw this last one because it's come in from David. Next calendar year, when do you expect to complete your Ta Khoa DFS?
Yeah, so it's still on track for mid-year, and so we've got wood starting. We've got the ALS pilot plant. We did move the pilot plant to Perth to make sure we got it in time. The second phase pilot plant will be in Vietnam, but we're on track for mid-year, and then final investment decision. So we're all on track.
All on track. Directors and management have got skin in the game. One of the busiest mining executives that I've come across in a long time, Scott Williamson, congratulations. Lots going on there. Plenty of news flow to come. Thanks for joining us at the NWR Virtual Resources Series.
Thanks, Kerry.